how to get the cheapest payment on your house. That's what everyone is worried about over the recent years as affordability has become tougher for people across the nation. People are wondering, how much money do I need to put towards a down payment? Or how much money do I need to put towards an interest rate to bring that down? Hopefully relieve some of the stress that comes with a house payment. It is something I simply can't argue with because it takes up such a big chunk of our overall monthly expenses. But I'm here to change your mindset when it comes to a house payment, to your overall debt load, and what makes the most sense financially for you. I've been having this exact same conversation with multiple clients of mine over the recent months as interest rates have risen. So in this video, I'm going to talk about why putting a bigger down payment may be a bad move, why putting money towards an interest rate and bringing that down may not be the best financial decision, and why you need to look at your overall total debt load to understand what's the best decision for you when buying a house. So the gut reaction from a home buyer most of the time is, how much money do I need to put down to make my housing payment more affordable? Well, here's a nice little reference point for you for understanding how much money you want to put down to get a payment where you want it. So for every $10,000 you put down in a down payment on a home saves you roughly $60 to $70 per month. I will admit, as someone who's bought homes and then seeing it play out for other people, $10,000 is a lot of money. To save $60, it is not worth it for the most part, unless you have a copious amounts of money where you're wanting to put that larger down payment down. That is what you've decided to do. I've done a video on down payments in the past. If you go check out that video, that you can reference that to see what's the best decision for me. But the more money you put down, it may not equate to a monthly payment. So there may be other ways we can bring down that payment. So maybe the down payment isn't where you want to put your money to help reduce that payment. Maybe you want to bring down that interest rate and put money towards that. So here's an example. So typically, if you want to bring your interest rate down from your qualifying interest rate 1%, so from like 7% to 6%, it typically takes 2% of your loan amount to bring that interest rate down 1%. So on a $500,000 loan, if your interest rate was 7% and you wanted to bring it to 6%, it would cost you 2% of that loan amount, so $10,000. In this example, $10,000 would save you about $300. So that money's going somewhere and it's helping to bring down that monthly payment. The downside, though, is when you're paying to bring down your interest rate, that's all you're doing is prepaying interest. That money is not going anywhere towards equity or anything like that. So if you find yourself in a market where we're kind of at today, if you're putting money towards an interest rate, you may not have enough time with that loan to recoup the savings of that mortgage, because we may be refinancing in a year and a half to 2 years. But with this example, if you're spending $10,000 to save $300, you would need to have that loan for 33 months or almost 3 years to realize that savings. In this current market, based on what experts are saying, you will not hold that mortgage for that long. Okay, so I can't put a bunch of money towards down payment to make my payment where I want it. I can't throw a bunch of money at my interest rate to get it where I want it. It may not make sense. What are my other options? Have you thought about paying down debt, the other existing debt that you have, car loans, credit cards? So what people tend to overlook is the fact that they could pay off their existing debt and open up their purchasing power and be able to purchase more than they originally could if they were to put that money towards a down payment. So like I said at the top, the whole 60 to 10,000 ratio, it's about the same when it comes to debt. So for every $60 of minimum monthly payments that you can reduce, you're opening up $10,000 worth of purchasing power. So if you are eliminating that debt, you are putting yourself in a better financial position to purchase the home that you want. So think about this. Say you owed $10,000 left on a car and that minimum monthly car payment was about $500. If you were to pay $10,000 to eliminate that $500 payment, you are increasing your purchasing power by $80,000. In all three scenarios, this is the best place you can put that $10,000 to open up more purchasing power for your home. And nowadays, markets around the nation are getting insane. So think about that. $80,000 could have you going from, I can't afford a home in this market, to, oh, I can get the home I want. Now, here's a little trick on a conventional loan. Most people, when they think of a conventional loan, it's 5% down. Well, depending on your credit score, you actually can get a 3% down conventional loan. So on a $500,000 loan, again, that's a $10,000 difference. So think if you took, instead of 5% down, you did 3% down, took that $10,000 and paid off a car and freed up that money, whatever that minimum monthly payment is, $400, $500, instead of $10,000 towards your down payment and saving you roughly $60 to $70, you just freed up $400 to $500 and opened up your purchasing power with putting less towards the home. This is a nice little trick I'm bringing up to a lot of people who are qualifying for their 3% conventional loan and utilizing the money to the best place possible. The best part is you're paying off debt. It's not like this money's not going anywhere. This is how you need to think about purchasing a home. It's not just the payment on that home. It's that payment compared to the rest of your monthly debt load. How can you free up money elsewhere to help purchase the home that you want and have money going in a better place than a depreciating asset and into an appreciating asset? I hope this opened up your eyes about where your money needs to go or where it can be put to best use when purchasing a home. And if you've been thinking about purchasing a home and you want to go over a full financial outlook, you can book a call with me at millennialloanofficer.com and we'll go over what's the best decision for you for purchasing a home and your total financial picture. Thank you again for watching yet another one of my videos. If you're new here, make sure to hit that subscribe button so so you're not missing a single video that I'm posting, and I would truly appreciate the support if you could hit that like button and we can be broadcast to more people. Thank you all, and I will see you in the next video.